But one stock that we're going to talk about today is a Tata Steel. That's the one that has been in focus. That was a good show that was reported by the company yesterday in their Q3 numbers. As of now, the stock has given up most of its gains that we saw during the morning session. But yes, let's actually go across and listen into what the management has to say. We did have an exclusive chat with V Narendran. My colleague Ajay Sharma caught up with him. So let's understand what's the outlook forward for the company in terms of Tata Steel. Let's go across and listen in.
The India business has continued to be quite resilient. It's been a challenging quarter. Demand in India has been strong. There have been margin pressures because of international steel prices. But I think operationally, we've had a strong quarter. We've had good production. That's helped bring down costs. In Europe, we have two businesses, as you're aware. The Dutch business is going through a few challenging quarters because of the blast furnace relining going on. So only one of the two blast furnaces were operating. The blast furnace, which is being relined, is going to start next week. So you will start seeing better quarters from Netherlands because that has been a big drag for us. Normally, Netherlands contributes positive EBITDA and positive cash to our numbers. UK has always been a challenge. We've announced a significant restructuring, which we expect to play out over the next 6 to 9 months. And the benefits of that restructuring will be visible only after we complete that in the next 6 to 9 months.
Right. So what essentially you are saying is that UK may remain soft for some time, but Netherlands will start contributing back in the coming quarters.
That's right.
Right. Okay. Let's shift focus to India business. There was very good margins also this time in India business. Do you think this kind of a good performance from India business is sustainable in next few quarters as well?
I think it is sustainable. It will be challenging, but it's sustainable because good news is demand is strong, like I said. But prices are still a bit fragile, reflecting what's happening in the international markets. But I do expect that, in China, there will be a little bit more stability going forward because either they will cut production or reduce exports, in my view, because this is not sustainable. The Chinese steel industry is not making money at these prices. So we expect some changes there, a little bit more discipline coming from there. So that's the way we see it. I think, so I think we do expect to maintain this level of performance in the coming quarters.
Okay. So within this performance, which is good on the India business, Chinese imports, because the demand is good, Chinese imports are also hurting the industry, even when realizations are going up. How is this issue a bit of a drag in overall good environment in India business?
So it is having an impact. So what happens is, we are obviously impacted by higher raw material costs because when China produces a lot of steel, the raw material prices stay high. So you see iron ore prices and coal prices staying high. Because of that, there is margin pressure on the Indian steel companies, not just Tata Steel. And then when we try to push up prices, the threat of Chinese imports is there. So that's why, we've struggled a bit. We've represented to the government. I think everyone is watching how much of imports is coming in. It is increasing a little bit, but if it stays at this level or drops, then maybe things under control. So we're watching the space because in 2015, when China was exporting 10 million tons a month, we did appeal to the government and we got some support. Now China is exporting about 8 million tons a month, so it's pretty close to that. So let's wait and see what happens in the next few months.
Okay, that was the management of Tata Steel for y'all on the show. But